Disclaimer: this is not a financial advice, this is for education purposes only. By the end of this module, we will understand how to layer OTM covered calls over a SPY position. Learn the strategy rules, timing, delta, strike selection, expiration. Understand how this strategy balances capital growth plus income. Be able to deploy a 45-day rolling OTM call system manually or semi-automated. Section 4.1 Why use covered calls on SPY? Big picture: SPY's price action is relatively stable compared to individual stocks. It has deep liquidity and narrow bid-ask spreads. Options are available weekly, giving flexibility. Covered calls monetize flat or sideways markets, while still capturing growth. Goal: enhance long-term DCA results with option premium, without taking extra downside risk. Section 4.2 Strategy Overview: The rules. This strategy assumes you own 100 plus shares of SPY. You want to earn monthly or 45-day income. You don't want to get assigned too often. The rules: baseline version. Parameter, rule, frequency, every 30 to 45 days, rolling expiration, strike, OTM at 15 to 20 delta, low assignment chance, expiration, 30 to 60 days, with 45 as the sweet spot. Goal: earn 0.5% 1.5% per contract cycle, premium yield. Action on expiration: let expire or roll forward on Thursday or Friday. This balances premium collection with capital preservation. Section 4.3 Example trade, step by step. Assumptions: you own 100 shares of SPY at $500. You sell a 45-day call at $525 for $2.50. Delta 0.15. Premium collected, $250. Outcomes: SPY closes less than $525, keep shares. Keep full $250 premium. Repeat with new contract. SPY closes greater than $525, you're assigned, sell shares at $525. Gain, $2,500 in capital plus $250 premium. Rebuy SPY on Monday to reset. This is called callaway and reset. You can automate the rebuy or wait for a dip. Section 4.4 Risk/reward trade-offs. Factor: upside, downside. Premiums, monthly income, lower in low volatility. Assignment risk, keeps you disciplined, may miss upside runs. Market crashes, you still own SPY. Covered calls don't protect downside. Opportunity loss: if SPY rockets, you capture your upside, but this is fine in a retirement context. Income plus core growth is the objective. Section 4.5 Strategy Performance Profile. Expected returns over 12 months, illustrative. SPY movement, result. Flat or minus 5%, still earn 6% 12% from premium. SPY up 5%, 6% from capital gains plus 6% from calls. SPY up 15%, capped gains but likely earn 12% 15% total, calls plus assigned. SPY down 15%, covered call softens the loss slightly, but still down overall. Section 4.6 Rolling the call. What does roll mean? Close the existing call early, if it gains value. Open a new one at a farther expiration or higher strike. Aim: lock in profit plus reduce risk of assignment. When to roll: premium has decayed greater than or equal to 75%, 5 to 10 days to expiration and SPY is near strike. Market conditions suggest a spike in volatility. Advanced traders can automate this logic with tools like Option Alpha, Tasty Trade bots, or spreadsheets. Section 4.7 Assignment, simulate and plan 12-month strategy. Instructions: assume you own 100 SPY shares, go to Options Strat or your broker, choose the next 45-day OTM call, delta 0.15 to 0.20. Repeat this cycle 12 times and estimate yearly income. Section 4.8 Quiz. Question 1. What delta range is targeted in this strategy? A. 0.10 to 0.20, white tick mark emoji, B, 0.50, C, 0.80, D, ATM. Question 2. Why is 45 days used as the preferred expiration? A. Premiums are highest at that point, white tick mark emoji, B. It's a legal limit, C. It avoids taxes, D. Assignment never happens. Section 4.9, Lesson Summary. Concept takeaway, strategy, sell 45-day OTM calls on SPY to generate income, delta, aim for 0.15 to 0.20 to reduce assignment risk, repetition, income compounds monthly or bi-monthly, adjustments, roll or reset if SPY approaches strike. Thanks for watching. For similar content please like, share and subscribe. See you in the next module.